Hey traders, and welcome back to Market on Mic. And of course, I'm your girl Natasha. And
All right, guys, thank you very much. This is Daniel, and you're listening to Market on Mic episode 16. So it's great to have you back to another exciting episode of Market on Mic. And this episode is actually going to be different and exciting. We're bringing a whole lot of spice and fun into this. So get ready to experience a whole new level of trading. Like I said, I'm actually Daniel. Thank you once again, Natasha, for introducing me. We're going to be talking about a very simple concept today in trading, but also one of the most powerful, and is actually risk reward ratio. There's been a whole lot of fuss about what is the best when you're trading, what's the best risk to reward ratio you would use. If you're risking $1, how much should your reward be? So all of those fuss, we're going to be talking about them, and we have someone exciting with us today. And Natasha, do you do the honors?
of course, definitely, it would always be my pleasure. So, guys, whether you're actually new to the market or you're already deep into the charts, guys, this is a concept that will change and will shape the way that you trade for the better, of course. So grab your coffee, your notepad, just lean in and let's just get into it. And just like what Daniel said, we have somebody hot in the house today, right? And he said we're talking about risk to reward. I'm sure that we traders, if there's one thing we always look at is what our reward would be, but not quite everybody actually calculates what their risk also is. And it's crazy that everything we do, you have to calculate, not just trading alone, you have to calculate your risk to reward. So we have somebody here. I know this person, when it comes to risk, I respect because he knows risk. In fact, him and risk are like twins.
Honestly.
He knows how to take risk. When I see his trading account sometimes, I'm like, how? Like, how is your mind at peace? Yes, guys. So we're going to be talking about the best ways that you can manage your risk and also make something good. That's the first thing you should calculate on all trades. So we have today in the house, like I said, somebody hot, somebody very risky. Uncle G, welcome to the show.
Thank you very much.
Oh, you heard the voice.
That voice to ask
Hello, risk. So Uncle G, welcome to the house. Welcome to Market on Mic, and we're so excited to have you here. And guys, like I said, get your books because you're going to be learning a lot when it comes to risk with Uncle G. Uncle G knows everything about risk and reward. So we have him here.
All right, so welcome again, Uncle G. So I hope you guys are prepared to grab a whole lot of information from our special host, our special guest this lovely day. So before we go further, we're going to keep it very simple. Now, the risk to reward, basically, what does it mean? It's just basically how much you're willing to lose on a particular trade versus how much you're hoping to make on a particular trade. For instance, you have a trade or investment opportunity that you want to leverage into. So you need to decide, okay, how much am I risking on this trade or this investment idea? If you're going to risk in $10, what is the potential reward? What is the potential profits that you want to make? So that is what risks to reward is actually about.
Yes, guys. So let me just put it as simple as possible, right? So what Daniel is saying, for example, if you're risking $100 to make $300, that means that you have a risk to reward of 1:3, right? That means that for every dollar that you risk, you're aiming to make 3. I don't know if you understand. Like I said, remember, you have a risk. That is for every trade you're going to take, there is an amount you're looking to make. But let's not forget that also we have an amount that we're willing to lose on that trade. So just like I said, if you're risking $100 to make $300, it means you have a risk to reward of about 1:3. And like I said, it means your risk for every dollar that you're going to be risking, you will definitely be making 3 if the market actually goes your way. Simple, right?
Yeah, true. And here's the cool part of it. You don't have to be right all the time because this has to do with a whole lot of ratio. So in a situation where you have in 10 trades, 10 sample trades, you win 40% of it. So you win 4 trades out of 10 trades. And for every dollar you risk, like Natasha said, you're making $3. For every $100 you risk, you're making $300, right? So if you're winning 4 trades, 3 times 4, that is about $1,200. And if you're losing 6, you're just going to be losing how much? $600. So average, you are still up about $600 in profit So a good risk to reward actually keeps you profitable in the long run. So that's actually very exciting, and the power behind risk to reward ratio. And we'll be hearing from Uncle G shortly.
Yes, guys, everything Daniel said, this is actually what turns gambling into strategy. So it's not just about how often you win, but it means it's how much you win when you are right versus how little you lose when you are wrong.
That's quite powerful.
I hope we're all making sense, right? So we have Uncle G in the house right now, who's going to be telling us quite an amount of things, what he thinks, because the reason why he's here is because Uncle G is one profitable trader. He takes the risk, yes. So we're going to be hearing from him. Welcome once again, Uncle G.
Thank you very much.
All right.
I
So
appreciate it.
when you hear about risk and reward, please just tell us what comes to that mind of yours.
Thank you very much for this opportunity. Let me not waste much of your time. Well, when it comes to risk to reward ratio, it is a simple thing. Risk, reward. Of course, as we know, everything in life revolves around risk.
Yeah, true.
And I do tell people, one thing about the market, one thing you should always know, one thing you can always control is your risk.
Yeah.
Exactly. One thing you can only control at any point in time is your risk. So you want to be careful at every point in time as to what to do and the amount you are meant to be risking per trade and how much you are looking to get. I've been in situations where people risk a lot. Imagine your account getting to a drawdown of about ₦1 million, and at the end of the day, you are just closing your trade for about 200,000 naira. That is one of the one
Yeah, I
risk
can
to reward
understand.
ratio you can ever go through. We need to quite understand the amount in your account, how much you are willing to risk per trade, and the fact remains that you must be sincere enough not to go beyond those levels. I tell myself,
Pretty intense.
exactly. I tell myself, if this price, this trade, is getting to a drawdown of a certain level, I'm just closing it.
Okay.
That is it. I am not extending my risks for better reward. No, when it gets there, I close it and wait for better opportunity. So at every point in time, you must quite understand that on each setup, there's an amount you should risk, and there's an amount you should be getting.
Yeah.
You should be getting it. You should. You
It's a
should.
lot. Right. Yeah.
Yeah, you should be getting it, and then you must always have that at the back of your mind. You need to get the money. You need to risk. There's something called calculated risk. You take that calculated risk, and then you take your profit at the end of the day.
All right, thank you very much, Uncle G. That was quite profound. And without risk, there's no reward. So first of all, you must be willing to take that risk and calculated risk. Know how much you're able to part way with, and consider the reward. The reward shouldn't come first, but the risk, then the reward comes thereafter. Thank you very much, Uncle G. So now let's go a little bit further. And like I said, we're going to be getting a whole lot of information from Uncle G in this particular episode. Now, what if you think about it? Some people ask, or like I said earlier, there has been a force when it comes to the best risk to reward. So some people say, okay, the best risk to reward is 1 to 2. If I'm risking $1, you have to make $2. If I'm risking $100, I have to make $200. Some people say no, that the best is 1 to 3. If I'm risking $1, I should make $3. If I'm risking $100, I should make $300. But some people, they go as high as 1 to 8. Yeah, it's crazy. It's go as high as 1 to 6. Though that force has always been there. So I think Uncle G is actually going to be helping us clarify something. But before we get into that, now the big question is this: what's the best risk to reward ratio to trade with? Natasha, let's hear from you first.
Okay, so for me, the honest answer, I'm sure we all want to hear what I have to say, right? But the honest answer, it depends on your trading style, right? But for most traders, especially swing traders and day traders, I think aiming for at least 1 to 2 or 1 to 3 is a strong rule of thumb. Uncle G, what do you think? 1 to 2, 1 to 3, or
For swing traders, majorly, it differs on the trade.
Okay.
To reward differs on every trade. For swing traders, I tell you from a start, I tell people 1 to 1, for instance.
wow,
Yeah,
1 to 1.
1
Why
to
1
1.
to 1?
Yeah, exactly. Now, there are some trades that have the ability of giving you much profit. However, the risks on those particular trades are quite high. You want to make money, not try to lose it. And you want to be careful. You want to put that risk at the back of your mind. There's something I do at first. Whenever I want to pick any trade, whenever I want to place any trade, the risk is my default setting. How much am I risking? Okay, let's say I have $1,000 in my trading account, and then of course I decide that I want to risk 10% per trade. no matter what happens, I have that 10% at the back of my mind. I mean, I put my risks. So if the trade has the opportunity of giving me another 100, I take it first.
Wow.
Yeah.
Uncle G, you're an elite trader then.
Before going for 1 to 2 or 1 to 3, you must have it at the back of your mind. 1 to 1 at first. That's the least you can go. I never go beyond 1 to 1. When it's getting to 1 to 0.9, I am not taking that trade.
Oh, okay.
1 to 1, 1 to 2, 1 to 3. I know as swing traders, like you mentioned, they take higher probability trades. So they can go 1 to 1, 1 to 3, 1 to 4, and as much as the trade has the ability to keep them up. I don't think the highest I've ever gone to is 1 to 3 at max.
Wow.
And the lowest I've ever been is 1 to 1.
So you can see that Uncle G is an elite trader. Remember, when we talk about what elite traders do differently, we spoke about they always consider risk first. And just like you heard Uncle G, he always consider his risk first. So it's not just about jumping into that trade and trying to make profit. That's what most traders try to do. I just want to go make profit. I'm seeing them buy and I just want to join the buy. But for every elite trader, that is the 1% of the 1% traders. Like I said, if you see Uncle G's trade, your mind will jump. But just like he said, he's fine with 1 to 1, and I think that's not bad at all. Right? It's not bad at all. Like he said, especially if you're a swing trader, I mean 1 to 2, 1 to 3, depending on the probabilities of that trade. Remember, market is all about probabilities. We're going to win some, we're going to lose some, but you want to be able to manage your risk. But Daniel, what do you think?
Yes, that's actually quite exciting, because knowing the fact that you don't go beyond or below 1 to 1. So that means your worst case scenario is you're always going to lose one, or maybe if you're risking $100 for every trade, you're always going to lose $100 for every wrong or for every bad trade. And you're going to make either $100, $200, or $300 for every trade that you know has the potential to give you that particular kind of reward. So that means for you, there's no best risk to reward ratio. Depends on the opportunity. Yeah, that's actually better. All right, that's a very lovely insight. Hope you guys are taking notes. Yes, you're taking notes. If you want to trade like Uncle G, you must think like Uncle G.
Yes, of course.
Yeah, so that's very, very important. And if you look at it, if you're consistent with your risk to reward ratio, it doesn't actually matter how much you lose, because at the end of the day, the risk to reward ratio just helps keep your account to grow steadily over time. Right?
And quite a lot of pros actually even go as far as 1:4. That is, they go as high as 1:4 or even higher. But those setup takes patience. I'd always say patience is also a strategy, guys. And you have to wait for clean entries and bigger targets. It's a game of discipline. Uncle G, what do you think?
Yeah, you're right concerning that. Trading is a game of discipline. I tell people, if you want to win in this market, you just have to discipline yourself. Because at the end of the day, one thing is certain. It is risk management that will save your account. Risk management. There are days when you would think, oh, everything is going to be all right. Yeah, you don't put your risk management, your account is gone.
Like that.
Just like that. But once you put your risk management, you're on fire. I know scalpers that go as far as 1 to 18. I've seen that before.
Wow. Oh, wow. So risking $100 to make $1,800 on a single trade.
Yes.
Wow, you will still peacefully with that.
Not to even brag. I've done stuff like that before.
Oh, wow.
Yeah, I've done stuff like that before.
But why is it before?
When you are a beginner in this market, you want to go all out. That means the little money you have, you decide to add risk management to it, bro. Before you get to the promised land,
take a while. But do you think that, okay, maybe new traders that are starting out, most times they come with the idea that, okay, I want to make Lambo money. Right? They want to make that crazy amount. They are funding the account for $50. They want to turn $50 to $50,000, things like that. Taking such approach for you to achieve that kind of result in a short period of time. 1 to 1, 1 to 3 would not do anything for you. You will spend ages trying to do that. So what is the best? How would you advise beginner traders when it comes to risk to reward and trying to make some consistent gains?
Okay. So I'm not here to talk about strategies, but there are different strategies to the market. There are different approaches to the market. So there are people, when they see their setup, you know that the risk is really low. I see people risking as low as $10, 10 pips, and as low as 5 pips. On trades. Yeah, I've been in a situation where I had to risk less than 1 pip.
Wow.
Sniper. Yeah, sniper. So it depends on your approach to the market, your strategy to the market. Then you can decide on your risk. But for new beginners, I tell you, you still have to learn risk management. Whether you learn it now or you learn it later, you still have to learn it.
Yeah.
So, you learn at some point as you grow up and as you decide to start managing big fund. When you start little, you want to, trust me, you will go all out. You will learn. You will go all out. You will learn.
All right, thank you very much, Uncle G. So hope you guys are seeing the power behind the risk to reward ratio. And like the example I earlier gave, it doesn't really depend or doesn't really matter on how many trades you win or how many trades you lose. If you're going to be consistent with your risk to reward, for every dollar you risk, you're making maybe twice or thrice of it. But even if you're losing more than you win, the risk to reward ratio just puts you back in the positive.
Of course,
yeah, puts you back in the positive.
Okay, so just like what he said, so the ratio you get to pick should actually match just how often you expect to be right. So what I'm saying is, if you're wrong a lot, go for bigger rewards. So if you're more accurate, then you must settle for smaller risk to reward, like 1 to 1.5.
Yeah, 1 to 1.5.
1 to 1 to no. I think that's actually very exciting, because if you are someone that, okay, for every 10 trades you take, your accuracy is high, you're going to win about 8. Why go for going for 1 to 3? Because most times they say that the bigger the reward, the lesser the win rate per se. So if you're looking at, if you're always going for 1 to 3, or if you're going for 1 to 4, the lesser the win rate. Maybe for anyone going for 1 to 1, your win rate may be higher. What do you think, Uncle G?
Yeah, so for you going on 1 to 1, there are high chances that your win rate is definitely going to be higher. But let me just chip this in. When we talk about 1 to 1, 1 to 1, then it doesn't mean exactly 1 to 1. Now you can see 1 to 1.5, 1 to 1.7,
Yeah.
1 to 1.3, 1 to 2 point something. So this is how it varies. So the lesser your risk, the better the opportunity in the market.
Sure.
In terms of your pips.
In terms of pips, actually, and in terms of how good the setup is. Of course, we see a lot of trades, wait for a lot of trades, and at the end of the day, they don't give us what we expect. But what, like I said, would keep you is the risk management. And when you consider that, okay, I am quite confident about how little this risk is and the reward, I tell you, these are even one of the best trades that gives you the stressless opportunity.
That's nice.
When you enter in, you just go straight into profit and you feel like, everything should be like this. But at the end of the day, when your risk is small, gives you that opportunity to sleep and then accept your risk. We accept your risk.
All right, thank you very much, Uncle G, for that. I'm quite excited. Again, let's move a little bit further. All right, so what are the mistakes that traders make when it comes to risk to reward? All right, so there are some misconceptions that a lot of people have. So let's look at it, because a lot of traders, they usually think that they are using a good risk to reward, but they are not. Natasha.
Yeah. So I think if we're talking about one common mistake that I know that I see most of the time, is moving your stop loss to wide. I think I've seen a lot of traders who just pick their stop loss from the chart. Just look at, okay, fine, probably use your support and resistance and just pin a particular place. Okay, probably if price break below this support, and they don't consider probably what that risk is, or probably how much they would be losing based on probably the lot size you're using, their account size as well. And you enter a trade, it moves against you, and instead of taking the loss, you just widen the stop. And we have people that just keep moving that stop loss with the hope of, just like what we said, is that this market will do what it is supposed to do, not what you want it to do.
Yeah.
The market is reacting to certain things, and you cannot just assume that, okay, because I've been buying for a month now, this market is just supposed to continue back. So the moment it's not buying, you're moving your stop loss, and before you know it, you're widening the stop. Now your 1/2 just became 1.0.5
or 1 ratio negative minus. So it's actually very, very crazy, because you can think that, okay, you put 1 to 2, the market is going against you, you're moving your stop loss. Your 1 to 2 has turned to 1 to negative 2. So it's actually, you need to be quite.
And you see a trader trusting every support.
Trust.
Yes, like I'm expecting price to just get to the support and go back up or and you're like, but the market is just doing what it's doing. The market don't know you, it doesn't know me. There's no emotions.
Exactly.
The market is doing what it's supposed to do.
Yeah.
So and then we just see traders keep moving. Don't worry. Once it
back.
gets to this, it cannot break past the support. It cannot go past this resistance. It cannot do this. It cannot
one ratio blow the account. All right, and another one is actually focusing on the reward. So the idea is not to really focus on the reward, but on the risk, like you rightly said. Uncle G also made mention of it when he was starting. The first thing you consider is your risk. You might enter a trade that doesn't have enough room to reach a maybe 1 to 2 or 1 to 3 target, but you try to make it fit. You force it in every way. You try that, okay, I will maybe increase my lot size. You just try to force it, and at the end of the day, that's not actually a smart move. That's actually hope. You don't right in trading. You don't hope. You respond to what, not hope that the market moves in your direction. Uncle G, just give us, what do you think about some of these mistakes when it comes to maybe shifting your stop loss?
Especially new traders. You see that, I think, just like you said, as you get to trade, you learn. As you're losing money, that discipline begins to come, whether you like it or not. So I think we see most of the new traders sometimes go on some crazy risk. What are these common mistakes that I'm sure probably you experienced for your first time trading, or things you've actually seen some of these traders do and you're like, wow, yeah.
Okay, it starts from your mentor. Once your mentor starts coming online, posting crazy figures, I won't speak against anybody. But your mentor are part of the people that influences your decision. Now, recently, for a long while now, I notice whenever I go online, I see a lot of people doing crazy things like 100 lots, 50 lots, stacking and the likes on a small account. Then the next thing that comes to your brain is, I can do this. Risk to reward.
Hope.
No. Risk to reward in the trash bin. Yeah. So you begin to believe you can do that. And then once you do it the first time, you think, okay, that is the holy grail to the market. You need to keep on doing this. And then you've thrown out risk to reward through the window. And then you really want to now start scalping and then taking your small money to a level where it can never get to.
That's true, because you know that this market cannot get here. Now I'm just hoping that it get there, but and that's actually crazy.
Yeah. So I tell people, one thing you should also understand about the market is, don't pray.
Don't pray.
Don't pray. Just do what is right. Don't pray, and don't, like you said, don't hope. Market does not respect hope. It has to do what is right, because the fact remains that you are praying, someone else is praying, everybody is praying. Children of
Maybe
God
somebody that praying, someone that's praying. God was asking
person that is just on the right side of the market, and that is just the truth.
That's just the truth. And a lot of traders begin to shift their stop loss, and you don't do that. Always stick to it. When it hits your stop loss, and then you think, okay, this trade still has the ability to go in your direction, just wait for the trade to align and then go again with the same risk management. If you go on one-on-one, you lose a 10% at first. The second time you are going and then it's going in your direction, you are making 10% back.
Sure.
So you are back to break even of your whole account. But if you hit 1 to 3 or 1 to 2 risk to reward, you've made something dead to your initial capital. So this is the only way you can actually stay long in this market. A lot of people also, when it comes to risk to reward, they don't think, okay, let me put my stop loss here on the chart, and they don't do the calculation.
Sure.
No. I do something when I see that, okay, this is my risk. I put my lot in the amount of the risk. It doesn't matter how small the lot is going to be. Now, my first trade, let's say my risk to reward is 10% of my whole account, and then my lot was about 1 standard lot. And then the following trade, maybe I'm trading a high volatile instrument, and I'm seeing my lot. No, I can't use a standard lot. In fact, on a high volatile instrument like US 2000, US Tech, and NAS 100 or gold, I can't use the same lots.
Sure.
Now I have to drop my lot.
Sure.
So this is how you put in appropriate risk management so you don't lose your money. Like I said, if you do what is not meant to be done, you will pay for the school fees.
Of course, guys. And the thing is, one other one is I see a lot of people cut their wins too early. I think it comes with the no discipline thing.
Yeah.
And the fact that a lot of people do not still understand that losing is part of trading. The people who aim for 1:3 but close at 1:1, and that's because they get nervous, especially when they just lost their last trade.
Yeah.
See them, they become nervous. So the plan is there, but the discipline is not.
Yeah, discipline as to holding your trade is quite essential, and I tell you, it's something you have to learn. I lost my last trade, and then the following trade I want to make money from it. Once it gets into profit, a lot of people freak out.
Okay, yeah, true.
They freak out on the trade.
Yeah, freak out. That's crazy how traders, they're able to hold losses.
Yeah.
But when you're in profits, you're beginning to freak, okay, this loss,
What
this
is it,
profit
right?
must not
Does
come.
not
But
come back.
there's those kind of things. How do traders tend to do that discipline?
Okay, I would say you just have to learn it. I said mastery is the mother of. What do you say? I can't remember. I just gone back.
I don't even know to drop
So I was trying to remember that phrase. However, you have to master. You have to learn it. The one thing about trading is you have to conquer yourself. Yeah, you have to conquer yourself at the end of the day. It's not easy, I tell you.
Okay.
This is about money. This is when a lot of us have not handled such kind of money before, such kind of profit. You have to conquer yourself and live in that trade to get to your take profits. Now, if it's not getting to your take profit, then that's where you can now start. Okay, I've gotten to a 1-to-1 risk to reward ratio. Let me close at this point, or 1-to-2. And then if you see better opportunity, you can actually enter again. However, it's quite hard. Let me be sincere. We are human beings. Emotions will actually come in. But you have to learn, like I said, you have to conquer yourself, discipline yourself. What's come to worst, shift your stop loss, maybe to break even if price is going your direction. At the end of the day, you still have your account. One thing you should know, like a wise man once said, he said, not every business you do will result into profits.
Almost immediately.
In fact, 50% of business you do will not result into profits.
Wow.
Yeah, only the few ones.
He's a wise man.
I actually read it in a book. Yeah, I read it in a
Okay.
book.
So, Uncle G, let me ask you one question.
Okay.
Especially when I get to talk to people who are probably first-time traders who have lost money. They always say this thing, and I just wanted to confirm if it was true. If
Okay.
it is okay for us to have that ideology towards. They would say, don't put in money you can't lose. Or, I don't want to put in money that I know that I can lose. Because yes, we're all trying to make profit. We're all trying to do something different. And go to trading is to make profit.
Yeah.
But would you say that, when you're putting money into trading, then you should actually take your mind off it and be like, you know what, I already lost that money. Do you think that is a good way to look at it?
Let me tell you a story. I was about trading, and then I reach out for advice from someone, and then the person said, if you trade, you are going to lose your money. I was like, wow. So I didn't start trading at that point in time. And then 6 months later, one way or the other, I'm not going to go into details, I lost that money, not to trading. I sat down and I was like, well, friend, me also trading. I was like, I still lost this money at the end of the day.
Wow.
Yeah, so you need to have it in mind that whether you risk or not, business, investment, putting your money to work is something that is essential. You either learn or you earn. Two things get to happen. So if you keep that money dormant and you decide that, okay, it's only the money I want to risk, there are two things that will happen. You might not get to where you are expected to get to. But I tell people, you only need one why it's going to work. You only need one reason. When you have 100 million reasons why it's not going to work, when you need to put little money into trading, you will never get there. Let me tell you, okay, now if someone is trading with a $50 account and someone is trading with a $1,000 account, the person with $50 will get frustrated by the risk to reward ratio.
Sure. What are you even risking?
What are you even trading?
What are you trading?
What are you trading? Yeah, you will get frustrated by that risk to reward ratio. You will never get. At the end of the day, maybe in 3 months you have actually made $25, where someone who is putting adequate risk to reward ratio in a month has made a $1,000 profit. So you will never get to your destination saying, okay, it's only the money I can make. I tell you, at the end of the day, every money, no one gets to take this money outside of the world. Every money you put in it is an investment. Whether you make profits or you lose it, That's the fact. I thank God for majority of the losses I've had in this market.
Wow.
They are what shaped me into what I
I
am
have
today.
never heard anybody be grateful for their losses, but this is a
School
new
fees.
perspective. So that is good.
All right, thank you very much, Uncle G. That was quite exciting. You paid a lot of
Thank
school
you.
fees.
Of course, I paid. Oh God.
Oh,
The first money I lost in this market was accumulation. I was like, okay, after being a student, I gathered up the money and then put it in the account. 3 days.
God, you want all your school fees.
In
3 days.
fact.
Wow.
All right, thank you very much, Uncle G. So the bottom line is your risk to reward plan only works if you stick to it, right?
Yeah.
So you can't bend the rules mid-trade and expect long-term success. So that is very important. So stick to your risk to reward ratio. So if you're fine with 1-to-1, so sometimes you might decide, okay, you can always start from 1-to-1, then scale up gradually. You'll start from 1-to-1, then move to 1-to-2, move to 1-to-3, see which one works best for you and stick with it. So you can't know unless you try it out and you stick with it. Like I said, you can't bend the rules mid-trade and expect long-term success. So long-term success stays or starts or extends with discipline, right?
All right, guys. So I hope you have learned. I hope we've written down things. I hope we're already planning our risk to reward on our next trade, and not just planning it, I hope we're also willing to stick to it. All right, now let's actually land the plane. Now we already know that risk to reward is your first filter. If the setup doesn't give you good risk to reward, please skip it. Don't just chase the trade. Protect your capital. Remember, if you don't have capital, no trade, no
Exactly.
profit. So you have to also be looking to how to keep your capital intact while you're actually making profit.
Yeah, very important. Your risk to reward won't make every of your trade a winner, so you don't need to chase it. But rather, it is your math that would work over time. So that's what really matters.
Okay, guys. So based on your account size, please find your ratio and of course your risk appetite. Stick to it and build your trading plan around it. We've talked about trading plan a number of times.
Over and over and over again.
And over and over again, guys. Because in this game, it's not about being right. Remember, nobody can predict the market. If we could all predict the market, Uncle G, please tell me, where would you be if you could actually predict it?
Sipping champagne. Awesome.
Right, you see all that Ferraris, all those Lambos we want to buy, would have gotten it already, right? So like I said, in this game, it's not about being right, it's about getting paid when you're right. So for every time you're going to be right, you want to be able to capitalize on it.
All right, so we're actually not going to end this episode without saying a big thank you to Uncle G. Thank you very much
Thank
for
Thank you very much.
coming around to
Uncle G.
Market On Mic. I'm sure the listeners will be amazed and glad that.
And I'm
you came
sure
around.
they have and
Yeah,
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 that's one
absolutely.
hell of an
You know,
experience.
trading is actually an experience, it's a journey. Someone said success is a journey, not a destination.
Sure.
So you have to go through it.
Yeah, thank you for that last.
Thank you.
Like,
I need to
right?
remember.
Yeah, so that's it for episode 16 of Market On Mic, guys. So if you enjoyed this episode, if you got a whole lot of information from Uncle G, the deep advice, you need to subscribe to the channel. All right, subscribe, like the video, or like this particular episode. Share with your friends, leave a comment. It actually means a whole lot to us.
Yes.
Make sure
and-
you are subscribing.
Yes, thank you, Uncle G.
And put on a notification so you get an update every time. Make sure you are listening to Markets on Mic.
Thank you very much for that one, Uncle G. And if you have actually got a question about trading, charts, or strategy, please hit us up. Market On Mic on Twitter, on Instagram. We might actually feature your questions on the show. So until next time, guys,
Trade smart.
manage your risk. See you in the market. Bye.